Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 16th of January 2022 and we're publishing our weekly gold and silver update for week 2 of January. Now this is broadly the same video as the update we published yesterday where we highlighted that gold and silver prices have risen against a falling dollar. However, what we did not mention yesterday was the build-up of forces on the Ukraine border, which could potentially spark off the geopolitical issue we did mention that could affect prices during yesterday's video. So let's take a look. Gold rose $22 last week, rising from $1,796 to $1,818, having hit a high of $1,829 and a low of $1,790, a rise of the week of 1.2%. In sterling terms, it finished at £13.29, that's up £7, and in euros it closed at 1,592 euros, that's up 11 euros. Silver rose 59 cents, rising from 22.40 to 22.99, just shy of that crucial $23 level. But it had hit a high of 23.33 and a low of 22.21, a rise of 2.6%. In sterling terms, silver closed at £16.81, that's up 33 pence on the week. And in euros it closed at 20.14, that's up 0.42 euros, just under half a euro. The gold to silver ratio fell from 80.2 to 1 to 79 to 1. Bitcoin rose $1,367 and currently stands at $43,026, though it did dip below 40,000 at one stage during the course of the week. The Dow Jones closed on Friday at 35,911, down 201 points on the day and down 320 points on the week. The S&P 500 closed at 4,662, up 3 points on the day, but down 15 points on the week. And the Nasdaq Composite closed at 14,893, up 87 points on the day, but down 42 points on the week. So, a disappointing week, but not by a huge amount for equities. However, oil prices rose and rose quite significantly. Brent crude closed at $86.06, that's up $4.31, and WTI crude closed at $83.82, that's up $4.92 on the week. That's a rise now of over $8 for each of them, covering the past 2 weeks. The dollar index stands at 95.16. That's down 0.55 on the week. So we concluded last week's video with the following forecast. We therefore see gold trading between 1750 and 1850, with 1725 and 1875 as outliers, and silver trading between 2175 and 2325, with 2125 and 2375 as outliers. Well, gold traded within our normal range, within an even tighter margin than we predicted, with just $39 difference between its high and low. We did expect a little bit more of a disparity simply because of the rather large amount of economic data being published last week. Silver also traded within our normal range, but for one day entered into our outlier range by just 8 cents, with a disparity between its high and low for the week being $1.12. Our daily updates, of course, follow the progress of gold and silver prices each and every day, and provides both an economic and news background for these movements. So if you're not subscribed to this channel, then please do so, and press the bell sign, as although we try and publish these videos by midday every day, sometimes we miss that slightly, and it's useful to be notified when YouTube publishes that video. Now, last week we stated that, quote, traditionally at the start of a year we would expect to see a little bullish sentiment in precious metals, but this frankly was sadly lacking, unquote. Well, it came back to traditional form this past week, and prices began to behave in the manner we were expecting, albeit modestly. The economic data during the week gave little hope for a reversal of the Fed's tapering program, intention to reduce its balance sheet size, and the prospect of raising rates perhaps as early as March. Well, that was perhaps up until Friday. Until then, economic data was pretty much in line with expectations, and a further uptick in core CPI. However, on Friday, the retail sales figures were extremely disappointing for December, coming in at minus 1.9%, compared with plus 0.2% in November, and against expectations of minus 0.1%. Excluding automobiles, the figures were even worse, minus 2.3%, compared with plus 0.1% in November, and expectations of a positive 0.3%. Industrial production figures for December were also lower than expectations, minus 0.1% compared with plus 0.2%. And the UMich Consumer Sentiment Index for January, the preliminary figures, came in at 68.8 compared with 70.6 in December and 70 which was expected. We have to admit, though, that we saw little reaction to these figures in the gold and silver price, which suggests to us that traders have currently made up their minds that the Fed is going ahead with a rather hawkish approach over the next 12 months, simply because of inflation concerns. But we also have to put into perspective that even if we do have 4 interest rate increases this year, it is still likely to leave the Fed funds rate by the end of the year lying at about 1 to 1.25%. So not a particularly earth-shatteringly high level of interest rates. Now, this week's economic data is far less relevant, and so we have no great expectations from these figures for the next week. On Monday, there's nothing scheduled because of Martin Luther King Day. Tuesday, Empire State Manufacturing Index for January, and the NAHB Home Builders Index for January. On Wednesday, we have both building permits and housing starts for December, and the Philadelphia Fed Manufacturing Survey for January. Thursday, our normally weekly jobless claims figures and existing home sales for December. And then on Friday, leading economic indicators for December. So apart from the weekly jobless claims and perhaps the leading economic indicators, there's little here to spark any major move in the US dollar or gold and silver prices. With that in mind, technically gold has a level of support at $1,821, but more significant at the 200-day moving average of $1,800, which is also strong psychological support, and is the area around which gold has gravitated for almost a couple of, if not a few, months. Resistance is seen at January's high of 1831, and of course strong psychological resistance at 1850. The MACD has suggested a buy signal. Silver has performed better than gold this last week, with support levels broadly seen around the $22 mark and $21.50 underneath. We have strong resistance though at $23.50, with outlier ranges with a $5 spread of between $20 and $25. That's according to the market traders. So how do we see gold and silver performing this week? Well, we're essentially at the mercies of geopolitics and any fallout from the Omicron spread. Energy price rises are likely to have an impact, and the US dollar value is in large part going to be determinant on how other central banks are reacting to their individual economies' performance. So short of any major disaster, we see gold trading between $1,775 and $1,860, perhaps trading at the upper end of that range. Our outlier forecast for gold is $1,735 to $1,880. And silver we see trading between $22 and $23.50, with $21.50 and $23.90, perhaps stretching to $24 if people are ambitious, as outliers. What do you think? Do share your thoughts. Thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign, of course, so you're notified of our videos as and when they're published. Finally, we wish you a safe, enjoyable weekend and prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.